You're listening to AI Prism from Seoul Economic Daily.
It's Friday, May 8th. I'd like to share some thoughts about markets daily. So looking at the KOSPI today, we just saw our third straight record close at 7,490.05.
Right, but the underlying flows are what's really interesting here.
Yeah, because foreign investors simultaneously dumped a record 7.154 trillion won. That's 5.3 billion US dollars.
Exactly.
So why are foreign managers aggressively selling right into a rally?
Well, they're selling because of the massive retail offset. Retail buyers just stepped in with a net buy of 5.991 trillion won, or $4.4 billion.
Right.
So even though we're seeing target upgrades, Investment Securities raised their target to 9,000, and Citigroup to 8,500 foreign managers are actually selling the rally.
Which makes sense. They use that strong retail bid as their exit liquidity.
Exactly. They get out without pushing the prices down.
But that aggressive retail buying is causing some real mechanical issues, especially at the opening bell.
Oh, definitely. The 9 a.m. open is incredibly congested right now. It's like everyone rushing through a narrow doorway.
Right, and we're seeing that in the data. Overall volatility interruption, or VI triggers, are up 61.9%.
And if you look at just the 9 to 10 a.m. window, those triggers has spiked by 113%.
Wow. And just to clarify for everyone, VII is a single stock cooling off mechanism, right?
Yeah.
Not an index-wide circuit breaker.
Correct. It doesn't halt the whole market. It just pauses individual stocks that are moving too fast.
So traders are facing severe execution risk in that first 30 minutes of trading.
Very severe, yes.
So while market mechanics are trying to cool down single stocks, deeper structural gridlock is entirely freezing major state-owned assets.
Yeah, Korea Electric Power, or KPISO, is the prime example here.
Right, they have that stalled 80% stake sale of the Jordan Alcatrana plant.
To KPS, exactly. It's completely gridlocked.
Because of the National Assembly, right?
Yes, there's a new 30 billion won National Assembly oversight threshold. It's completely blocking the sale.
Which is a huge problem because KPISO is carrying 205.7 trillion won in debt. That's about $151 billion.
Right, with a 4.3 trillion won annual interest cost. This oversight rule paralyzes their ability to manage that balance sheet.
So if these state assets are frozen, where is the institutional capital actually flowing instead?
Well, we've got two quick hits on that. First, the top securities firms just supplied 9.8753 trillion, $7.3 billion in venture capital.
And we should flag this. That's a regulatory risk capital category in Korea.
Right. It is not the Western VC industry.
Right.
And they are planning a 1 to 2 trillion won secondary exit fund to manage it.
Okay. And the second flow?
Seoul CBD office real estate.
Even with the oversupply fears?
Yeah. CBRE Korea notes that those fears are overdone. We're looking at record 2025 transactions hitting 33.7 trillion won. That's $24.8 billion.
So South Korea's market right now is this mix of surface-level records and underlying structural gridlock.
Exactly, which brings up a really provocative question to end on. If KPISO cannot sell assets and rate hikes remain politically impossible, could this utility gridlock eventually trigger a broader sovereign credit reassessment?
Which would obviously challenge this entire KOSPI rally.
Right. It's the underlying risk everyone needs to watch.
That's today's AI Prism Markets Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.